It's Jen Suzuki, and I'm in the industry. I meet some of the greatest leaders out there, dealer execs, dealers, GMs, and I'm bringing them in the studio to talk to me about what's making their business pop, what's accelerating their growth. I'm sharing my own personal strategies for your sales teams, so I'm ready to get after it. Are you? Welcome back, listeners. Today we have an incredible guest, Dan Garces. I hope I said that right. Did I say that right?
Absolutely. Yeah.
He's the president and COO of Capital Automotive. I tend to see him and his colleagues regularly because they happen to be in the same building as the NADA headquarters and academy where I've been an instructor for 11 years. He's got a lot of experience, 3 decades of expertise in dealership financing and acquisitions. He's helped dealers across the United States and Canada expand those portfolios. Everybody works so hard for, and we've seen a lot of expansion over the last several years, especially. It's really taken off. It's still going hot, by the way. And he's got this very clever and creative real estate strategy that's helping dealers expand that portfolio. It's helping GMs today. And I really, this is why I wanted to do this episode, because I work with so many owners and GMs. And a lot of these guys, they came from technician, salesperson, and they worked their way up through the dealership to actually be an owner. And it's actually very, very possible, maybe more so possible than a lot of people think. He's structuring all these game-changing sale lease backs to navigating dealership growth, and he knows what it takes to scale successfully. Just get ready, you guys, for some powerful insights from Dan on how top dealers are leveling up their business and how GMs are taking a small percentage ownership and now getting their own dealerships. Welcome, Dan.
Thanks, Jen. Oh, this is so exciting. And I know you've been delivering, amazing content to your audience for years, and I'm just excited to be a part of it as well. You often talk about, targeting the top 10% of performers that are at
right.
the dealerships. Those are the people you're talking to.
Yes.
And that's why it's exciting for me too, because, those are the people that choose to differentiate themselves. They take active steps. They listen to new ideas. They're continually learning. And I hope, we can educate them and give them some ideas and thoughts about what we do too.
Well, that's the thing is you're getting involved in helping people acquire new dealerships. And sometimes people think, oh, I don't have the money. Or sometimes people think like there are certain things in their current setup that is going to prevent them from being able to scale or acquire more stores. And sometimes GMs, they want more. They work their way to getting that 2% ownership. And they still have on the radar these hopes and dreams to get that their own dealership. And, they oftentimes we always think, and I know I have too, because I've been in this position myself, thinking, can I really afford a dealership? And so there's probably a bunch of market factors. There's probably a bunch of factors in general that dealers and GMs should watch for when they're considering maybe acquiring a new store. Tell me, are there certain red flags we should be paying attention to? Are there certain things that can help a person set themselves up to be able to acquire a dealership?
Yeah, that's a great question. And for sure, there's a lot of people that are in the business, like you said, and they're looking for, their next opportunity or how do they continue to grow their career. So, there are plenty of things to look for. And I think it's, operating the business the way they are currently as, with their dealer partner today, continuing to do that and to deliver, the best customer experience they can deliver to their customers to build a reputation. But as far as an operator who's looking to, if they're a general manager today and, they're looking to grow into an ownership position even more, we have tons of examples in our 26-year history of working with dealers that, we've helped managers do that and get into the ownership position.
How?
So, one example I can think of is, we had a dealer who he had no successor in place. The GM was in the store. It was in a major metro market. And the GM had, I think it was maybe a 5% ownership at that time.
Okay.
And the dealer principal wanted to get out. But where these blue sky numbers are so high these days, it was a really big number for him to be able to buy it out. And the dealer principal, instead of going out to the market, said, look, I'm going to sell my real estate today, take some chips off the table, get some capital, and let my GM partner operate the store for a few more years to the point where he had enough capital to buy out the dealership stock as well. So the dealer principal sold their real estate. 2 years later, the GM had enough capital, and he came in and he bought the rest of the dealership from the dealer principal. So that dealer was able to retire. He got his full valuation of his business. It took a couple of years longer than he thought, but he got the money. And then, several years later, now that GM was operating the store, and they came back to us and they said, "I'm ready to retire. I'm going to sell my store now." And they sold their store to a top 50 dealer group in the country now. So, that guy is now enjoying his car collection and sitting, retired as well. So it was a great example and a story for somebody like that.
That's an interesting angle. So what do you typically see in the current market that we're in right now? Because as you mentioned, blue sky numbers are very high. A lot of people are like, wow, dealerships they're through the roof. I mean, is this even possible? Yeah. What are ways that people can secure funding for acquiring a
So
dealership?
There's a lot. That's a great question. There's a lot of things that you need to consider in your capital stack and how you have the money to be able to buy it. And we're one part of that capital stack, of course, but there are private equity investors in this space as well, and there are more and more coming into the car business. I think when you're looking at private equity, some people will say, "Oh, that's kind of out there," and I'm not sure I really want to get into that. I think private equity can be very, very helpful because as long as you're partnering with a group that really understands the industry and has a team that's dedicated to automotive, that's where they're going to make a real difference in moving forward this transaction with you. Private equity firms, there are some that are dabbling in this space, and that's a little bit more dangerous. It's harder to get the manufacturers to approve them as an investor. It's harder for them to understand the business. But there are a few firms out there now that are truly dedicated to this space, and they really have great manufacturer relationships. They've already done deals, and that's really one great way to help find the capital you need to buy the stores. Of course, using a sale leaseback as an option for the real estate portion of the transaction also helps a lot because unlike a bank, we will fund at 100% of the value. So whatever that real estate is costing, that's the proceeds that we'll fund, and we'll pay for the real estate. Whereas if you had to do it through a mortgage, and let's just use a $10 million piece of real estate as an example, the dealer is going to have to pay $2 to $2.5 million down in equity because the lender is only going to go to 75% LTV. So that's one big area where we can save some money on getting a deal done.
I see. And so a lot of my dealer clients over the last several years have expanded tremendously. Yeah. I mean, really, going from 3 stores to 20 stores. I've seen it repeatedly, and they're continuing to acquire. Now, the properties have gone up in value, and I think that there's still a lot of options out there that are available for sale. However, many of these guys, did own all of their real estate in the initial phases, and I think that's probably one of the biggest expenses in the entire operation is paying rent. Yeah. So when you talk about you're talking about financing options for real estate, how would that work for somebody who's already scaling and they don't want to push out more capital? They are looking for a more creative way to expand and acquire. What would you suggest to them?
Yeah, I mean, so if you already own,
how does it work?
Yeah, if you already own a bunch of your real estate, your dealership real estate, and you just don't have the appetite to continue to own more because you want to buy more stores, then we don't have to own everything, obviously. I mean, like, you can keep all the assets in your family that you already have and say, these are the properties that we want to own. But on the next acquisition, then you can consider a sale leaseback just on that next acquisition. And we can be the partner at that point going forward. So that's one way that we could help, a dealer that's growing, that's already got 20 stores, but, they want to get 20 more. I mean, again, the blue sky and the capital that's needed just to buy, a 5-store group is tremendous. And if you add the real estate to that, that's almost doubling the amount of capital that you need to buy.
So break it down for us so it's very easy to understand how it works to do a lease buyback or in leveraging a real estate well, from your perspective, what you guys do in thinking about how this might work for the average general manager or the average dealer out there. What does this process look like?
Yeah, so that's good.
And do they have to have some things intact first before they would even see this as a viable option?
I mean, absolutely, they have to have a good track record. I mean, that's one of the things that we look at is, operating history. And if it's them as the GM operating the store, that's great. But if the dealer group has a good, strong history, that's very important. We look at credit. Credit is really important when we're looking at a deal. So that's something we very much focus on as well.
Yeah, unpack it for us. Show me what this looks like. And even, from the perspective of what I have in place, am I a good candidate? I'm looking at ways to expand my business, and I'm not sure if this is the right avenue to take in being able to continue to grow this organization.
Mm-hmm. Well, I think the difference that we can bring is, we very much like a bank, we can bring capital to the table. We're also, cheaper than the cost of equity. So an equity partner is looking for a bigger return than what our cap rate would be on a lease. So if you're looking at where your money is going to come from, obviously banks is one, your equity partners are two, and then, if you do a sale leaseback, that's another option. So, we can help the dealer underwrite the real estate. We can be a real estate partner for them as well. So when they're looking at an acquisition, operations is a big part of what you have to underwrite. I mean, the dealers are looking at, the financial statements, what franchises they're buying, are the markets the right markets, is there operating efficiency that dealer can bring to the table to this new acquisition. But what they don't really have as much experience in is underwriting the real estate side of it. And so we come in as a partner. We can come in and really take that half of the acquisition and handle all of your diligence and really manage and give you suggestions on, what we're looking at from a risk perspective. We look at, the valuation of the properties. We look at, the environmental issues on the properties. We'll look at the property condition, and the building condition. Are the HVAC systems working correctly? I mean, there's a lot of things that you need to look at when you're underwriting an acquisition. And a dealer typically doesn't have the experience on that side of the business. They really know how to operate. They're operators.
Right.
And
but not all the financial and the operational metrics that maybe a buyer should be focusing on for that long-term profitability.
That's right. And there's so many things that can affect the valuation of the property, whether it's entitlements on the property or restrictions on the property or things like that we really have experience with, and so we can help them with that.
So you're helping a potential client evaluate a dealership to purchase.
That's right.
Understood. And by the way, I'm sure you've seen some real interesting things out there as you do this. Are there certain things that stand out to you that become red flags in helping your clients sort of navigate making these big decisions that impact their future and their legacies and their growth?
Yeah, no, definitely. Like, there's a lot of risks in these properties, and you need to understand them. We've seen environmental issues that maybe people think are a big deal, and it sways a buyer away from a property. But we know how to underwrite that, and we can say, look, there are ways to mitigate this risk. This is still a very solid transaction, and so we can help through the mitigating kind of risks of environmental issues or entitlements on the property or other issues that come up that aren't common, but we see them all the time because we just do a lot of real estate transactions. And so we have tools in our tool set that we can fix those issues with and help, mitigate the risk.
Is there anything you could share with us to help put it into perspective, things that you're seeing maybe more frequently that have really helped dealers look at this and make some good decisions?
Yeah, I mean, valuation is one area where there's a lot of debate on what a property's worth. I mean, you can get an appraisal, it can give you a number, but
Right.
there are so many factors that go into an appraisal, and understanding it properly, is hard to do sometimes. And appraisals are an art, not a science. They are, you can, as an appraiser, they can really sway a valuation one way or another, and it could be to the benefit or to the detriment of the buyer. So you need to be careful understanding those appraisals. Really, challenging what you're reading in the appraisal, making sure that the comps are reasonable, that they pulled them from the right markets, whether it's a local market or did they pull comps from a major metro 90 miles away, that really that valuation doesn't apply to this location, and the seller's trying to inflate the value. You got to be careful for all these things, and so we can really kind of break those pieces down and really understand what's in there in appraisals.
I understand. Is there anything I'm missing here too that you see as areas where you really shine, and then in separating maybe you from other people that are doing something similarly? I think this is a creative way of financing,
Yeah.
and I imagine that there's certain things that make this. There's options that people have to weigh before they decide, okay, this is the direction I'm going to go. What are some things out there that, people are weighing, they're looking at, that you're helping them through?
I think what differentiates us from other real estate investors are our understanding of this business. We're fully dedicated to the automotive industry. We have a team of men and women that in our company that come from the automotive world. They whether it's through financing dealerships or working with the manufacturers in the past, or working with captive finance companies, or even auditors and CPA firms that focused on automotive. The team in our company really does understand this industry. We have a passion for it. We love cars. We love working with dealers. We love the entrepreneurial spirit of dealerships, and what you see in this industry. And I think that is really important, to be able to have a partner that truly understands the business and can kind of weed through the noise to say, is this a good deal? What makes it a strong deal? Like we understand dealership financial statements very deeply. If we get a package of financial information, we'll get through it very quickly and say, this is a strong deal. We like it. Let's move forward. We'll be a great partner for that dealer, and we can do it quickly. A lot of times people just don't understand the industry, and it's hard, and it takes a long time for them to make a decision.
And just switching mindset here, I'm just thinking, as you're talking about a lot of the single point stores I work with, I am thinking about successors. I work with a lot of third generation dealers that have moved into these roles, and circumstances change in people's lives every day. Lifestyle changes, and I've seen where even a third gen would be handed over this mega group or even a single point store and unsure what to do. And sometimes they want to just take it to they want to just grow this thing, double the size. They have big ambitions, but they don't necessarily have all the money to go out there, especially when you see valuations the way that they are right now. And thinking, how will I scale this thing? Or even these single point stores where I see a GM sitting there and he's been there for a long time. He's got the experience, he's got the tenure, he's got some money in the bank, and he really has visions of doing something big, and owning his own dealership. Do you run across scenarios like this, or what do you see as like who is the person that comes to you the most? And maybe you could share some stories with us on how you've helped them achieve their goals and dreams. And for those that are in the dealerships, really with this on the radar, thinking, wow, is this even a possibility? And now they're thinking to themselves, wow, well, maybe it is. Can you show us what this looks like as like a realistic picture? Maybe some examples of dealers that you've worked with and how you guys have gotten over the finish line.
Oh, that's a great question. And we have tons of examples like that. I mean, we're working on a deal right now. Our team is with a dealer who I met him about 15 years ago in the industry. He was a GM at a store. He worked for a large dealer group. It was a private dealer group he worked at. They had over 20 stores, and he was running one of their stores. Terrific experience. He worked at one of the Publix before then. And when I met him then, you could tell. I mean, he wanted more. He was capable of more. He was just really building his career. And a few years after that, he sent me an email one day and he said, "Hey Dan, I'm going out on my own. Can we have lunch? I just want to talk." And we had a nice lunch. We talked about the risk he's taking, what he's going on to do. He bought a small store. He didn't use our capital at that time. He didn't need it because it was a smaller store in a smaller market. But he really got into his own dealership, fixed it, got it up and running, created more opportunities, bought a couple of other stores, has now, I think, 4 franchises. Built his reputation with the manufacturers, built his reputation, in the marketplace. And today, now we're working on a new deal with him. And, we're going to, do a sale leaseback. We're going to provide some capital. He's going to use that money for more opportunities because now he's seeing bigger deals. He's kind of built the track record. He has the reputation. And now he's starting to buy some stores that, really he needs more capital. He needs another partner in there and he doesn't want to bring an equity partner in because he said, I want to own the whole thing. I want to be the operator and I want to run this dealership group. So he's bringing us in as a real estate partner, not as an operating partner. So that's a terrific example.
Okay. What do you typically see when when somebody is already in a single point, or not even single point? Let's just say they are well on their way, but they've been acquiring at a fast rate. Is this a client that you see? Absolutely,
and we love clients like that. So our average client, just to give you context of our portfolio, we have about $4.5 billion of dealership real estate in 38 states and in Canada. And our average client has 19 brands in their group. So they're large dealer groups, the average private client. So about 40% of our portfolio is with public dealers and 60% is with private dealers. And those private dealers have a lot of rooftops. Some of them are growing, some of them are just stagnant and they're happy with what they have. But the ones that are growing, keep coming back to us. They keep saying, okay, now we have another acquisition. It's a 3-store group that we're looking at, or, we're looking at a 5-store group. We just closed a deal this quarter with a dealer group that isn't buying another store, but they said, you know what, we want to take some chips off the table. And so we're going to sell the last piece of real estate and use that money for other investments. So there's a lot of different reasons why someone would consider doing a sale leaseback. And it always kind of falls down to they have a use for the funds and they're going to put it somewhere else if they're doing a sale leaseback, if they're selling something that they already own. And it diversifies their estate. It diversifies, their investment away from automotive potentially too. Because if you have everything tied up in the operations and the real estate, they're both tied to automotive. If you could separate some of that and from an estate planning perspective, take your capital, let's call it half your capital away from automotive and put it in some other asset class, that's a great way to diversify your risk.
I see. So can you unpack what it means to do a sale lease buyback?
Yeah, sure. Absolutely. So really simply put, if you own a piece of real estate today and it's got, it's $10 million in value, you would sell that real estate to us. We would enter into a long-term lease. So you would get the full 10 million. And let's just say you had, $6 million of debt on that property. So you pay off the debt with the proceeds, you collect the balance. And so you get the rest of the dollars in your pocket. You can use that for growth, for acquisitions, for, other things, like I said, diversifying your estate. And now you've set up a long-term lease with us where you have full control of the property. You're still, fully responsible for everything. It's a triple net lease. Your employees don't even know it happened. I mean, it's just like a financing transaction. There's no difference in how you operate your business, except that you've pulled some capital out of it. And you control the real estate through your lease. The other thing that happens over time, as you know, is manufacturers have image requirements and things like that. We will fund the construction costs of an image upgrade, as an example. So let's say you did a sale leaseback and 6 years later you have to do a $2 million upgrade to the facility.
We see this.
Right. And this happens all the time.
Yes.
Our clients will come back to us and say, hey, we need to do this project. It's going to be $3 million or whatever it is. And we will fund those costs. Of course, we charge rent on the new money that we put out there, but they're not writing a check. They're not using their own capital, even for the improvements on the facility. They're just paying for it through the rent as they finish the projects.
I see. Okay, yeah, that's great. That really puts it into perspective. And you mentioned, with manufacturer upgrades, and it just got me thinking about that relationship and how important is that relationship with the manufacturers when trying to expand a dealership group. Does it impact these sort of deals?
Yeah, it doesn't, because we're really we're almost transparent to the manufacturer. They don't know necessarily how the property is financed. It could be financed through a traditional mortgage. You could own it 100% with no debt, or you could have it in a sale leaseback and have a lease. As long as we fund, or they can fund the improvements, the manufacturer doesn't really care where the money's coming from.
Right. Is there maybe some common pitfalls that we could put on our radar in thinking about expansion?
People, worry about
Common
control.
mistakes.
Yeah. Well, I don't know if it's a mistake, but it's certainly a concern people have when they think about leases, is they worry about control. And, really, what we say is you don't have to own it to control it. You control the real estate. You can sell your business. Our leases have assignability clauses in them. You can sell your business and assign the lease to a third party. We do this, very often. I mean, we've had deals go from public dealers to private dealers. We've had deals go from private to private, or from a private to a public dealer. I mean, we see lease assignments because there's always constant buy-sell activity. So that's one thing you need to be aware of, is that you have the ability to assign your lease, to sell your dealership. That's something that we will certainly work with people on.
Okay. So you're just thinking about all these deals you did last year.
Yeah.
And even the ones that you didn't do. You've come across a lot of dealers, a lot of different circumstances. Is there something that you could share with dealers who are looking to expand that portfolio, to grow their business, and maybe there's some things that they could be more mindful of in increasing their valuation?
In increasing their valuation of the overall operating group? Well, that's a great question. One thing I would say is, if you do have a lease, you have lowered the entry price of another buyer of your dealership. If you're trying to sell something later, 5 years down the road, and you're ready to sell your business, if the buyer doesn't have to worry about financing the real estate, because all they'll do is take the assignment of the lease, now all the buyer has to do is figure out how to pay for the blue sky. And if they're doing that, they can pull more capital together to buy the blue sky and not worry about having to also pay for the real estate. It could lower the equity check by 40% of what a dealer or a buyer would need to execute on a buy sell. So you might be opening up your buyer pool to a bigger group of people who can afford your store, because all they're really buying is the operations at this point, not the real estate too.
I see. Yeah. So didn't seem like there's a whole lot that would hold somebody back from doing this if they were thinking about selling in the near future, that it could actually be a pro.
It could absolutely be a pro, and you're maximizing the value of the real estate today, and then also maximizing hopefully the value of your business later.
I got you.
Yeah.
Well, you've been around for a long time and thinking and very dialed into this business. And by the way, I had somebody on my podcast yesterday that was saying really nice things about you.
Oh, really?
Yeah. Yeah. And anyways, so I do value your opinion here, and I really want to hear, do you see things changing on the horizon, and you're just looking ahead, and do you see dealership ownership evolving or changing, or let me stop there, because I got another question.
Yeah, no, that's a really cool question. It's deep, because everything, everyone's looking at things, are changing, but this dealership industry has been the same for so long. If you really think about it, it's about relationships and connections with your customer, and that won't change, because I still think that a customer wants to come into the dealership. I think that, yes, you can buy it online, and yes, maybe, there's some conveniences of doing things online, but at the end of the day, if you're paying, the average price of a new car is $48,000 or $50,000 now, you want to come in and touch that thing and feel it and drive it and talk to a person. And, I still think that's the same experience. And I think you're going to continue to see that. I think people still want to come into the dealerships. Certainly the manufacturers are still requiring dealers to build the facilities that are inviting to customers, that they want to be, comfortable in the space at the facility. So I think that's something that is not changing, even though everyone talks about, technology really changing the retail model.
Yeah, well, that's good news for all of us. I mean, I don't see like a whole lot changing either, but it's you always have to be looking to the future and be thinking about your investments and, do they align? And, you've got a lot of ambitious dealers that are listening and ambitious GMs and want to stay ahead of the curve. Any advice?
I mean, I think it's just constantly challenging yourself to do better. Listening to your podcast, listening to, things that really are different and having an open mind to alternative ways to get things done. I think that's what differentiates people. And I think that's how you're going to grow your business and grow your opportunities is to, think about, the outside the box, kind of thought process of what can I do that's different that'll make me differentiate myself from somebody else.
Yeah. Well, we love that. We can all align with that.
Yeah.
Okay. So your business here is really outside of my day to day. And it's been, I found it really intriguing and interesting because so many of my clients are in expansion mode. I do see several of them selling off, stores, yet continuing to acquire others. And I just felt like this was an important topic that, especially for the people, let me tell you, some of my best dealers, my closest colleagues and friends in the business, I think of them when I do these episodes. I think, what would they like, and what would help them in that growth mindset? And as you mentioned, I do tend to work with a lot of top performers in a lot of different capacities. And a lot of these guys always say this, well, Jen, I didn't even finish high school. Jen, I started as a detail guy. I started as a technician. I started selling cars. Yeah. And it's so exciting when I work with these guys because I, also built my business from the ground up, started off as a car salesperson, and I just relate to the wonderful opportunities that this business offers. And sometimes people will put restraints on themselves because they just, think that there's a roadblock ahead, and maybe it's not, and you can just keep asking questions, and you continue to keep looking for how you can fulfill that dream, how you can continue to get those milestones under your belt. And this is why I wanted you to share what you guys do, being around for so long with such great reputation and just, creative ways to get to the end game. And for me, this is a high value conversation. It's educational, it's inspirational for all of the people that I work with. And I'm hoping that people will see the opportunity for growth and acquisition and scaling their businesses, because many of us, we just really want to be able to do that. And we need the sources and the tools, and knowledge is power, right?
Yeah, no, that's great. And that what you said is so true about, it's inspirational to me. And it's what drove me into this automotive industry really is I started my career as a commercial banker. And, eventually I made my way into the dealer group, and we focused on lending to dealers. And when I started meeting, dealer principals and like you said, people who started from nothing and really built a business through their entrepreneurial, understandings and really through grit and hard work, yes. I was so inspired and I loved that. And so I just really enjoyed working. I still really enjoy working with dealers.
Yeah, me too. Well, look, thank you so much for your expertise and just your willingness to share, what you got going on over there and where the land of opportunity exists for the ambitious people out there that are looking to get their own dealership or acquire more, grow their business.
Thank you so much for having me.
Thank you.
Okay.
If you like these episodes and my sales game techniques, you should snatch up our latest dealer education program I'm hosting. It's called Jen's Remote Classes, and it's a 1-hour, once-a-week class with me alongside other dealerships, all pursuing the same end game to achieve top 10% status in your dealership. For more info, hit me up. All my contact info's in the show notes. I want to hear from you. And follow Dealer Talk with Jen Suzuki right now to get notified when episodes like this one drop. This is Jen on the podcast Dealer Talk with Jen Suzuki. See ya!